Thank you. Take care. So, like I said, we're going to be looking at a little bit of a strategic overview. Again, it's going to be a short session, but what we want to get out of the session today is, first of all, nomenclature, and make sure that we at least have an idea of some of the things to consider as we move forward in any blockchain adoption and implementation. Hopefully we get a chance to look at regulatory ethics and governance issues, and of course any future trends. But if not, the slides would be there and you should be able to read through it. So we're going to start with the technical aspects of the blockchain security, and then business and operational security. So there's a lot of stuff on this slide, but and some of it is something that you're already familiar with. We remember this, right? Cryptography, decentralization, and consensus mechanisms. And we have also looked at what are some of the vulnerabilities in the organizational security and how blockchain can address it. This is where we are talking a little bit about the security challenges in the blockchain itself and where they might happen. And usually they happen in the consensus protocol. So proof of work, there is the security risk of 51% attack. I think we talked about this before perhaps, but the idea is that it's a majority rule, right, for validation. When people are doing proof of work, if most of the nodes agree that yes, that the solution to the cryptographic puzzle found is a valid one, then that is accepted, and a new node is created, or the transaction is validated and the new node is created. However, there is always a chance that majority could be the bad actor. So that's why it's called as the 51% attack, because the majority is more than 50%. So the idea is if somebody controls more than 50% of the network's computational power, then they get to rule the network, and that can be a problem. However, as we have talked all this while, the likelihood of that happening is fairly small as the chain gets longer. Okay, I thought I heard my own voice. Oh, okay. And of course, we know it's not really an it's not a security risk per se, the way we traditionally think of security risk, but energy, if there is no energy to run the system, then that means having no system. And we talked about this all this while, the environmental, the regulatory, the pricing, and all of those kind of things, or the energy grid infrastructure stability itself can be a risk to a blockchain system. Yesterday I had a chance to talk to Mr. Vinay Pandey for about an hour as part of one of the research projects. I was talking to different senior managers who are doing blockchain implementations to hear from them what are the issues and challenges they are facing. And one of those major ones was definitely the energy lack of a proper policy around energy needs of systems such as blockchain, because they require specialized energy and the sustain and stable and all those kind of things, and not something that can just be addressed by having a generator or a couple of generators, that type of thing. It was very interesting actually, all the things that I was going to talk about today in the slides he mentioned in our conversation. The regulatory, the lack of policies, the organizational strategy, and those are the main things. So very little has to do with the actual technology, but most of it has to do with everything else surrounding the technology. Anytime people are involved, that's where the trouble begins. So the other is, do we remember what POS stands for? Proof of stake. And here, if somebody is able to overwhelm because they have the highest stake and so on, then they can be the one setting the rules. So that can be a security risk. So what are the other things? Smart contract. There could be bugs in the program, because what's in a smart contract is a bunch of software. It's a bunch of different codes written where something is supposed to happen when an event gets triggered. So all of that is encoded as part of programming. And anytime you have a programming, somebody is writing that usually, and they could maliciously or unconsciously introduce a bug in the system which could then infect the rest of the system. So that's definitely, so how this is where I think we have talked about this decentralized autonomous organization. This is the one that Ethereum 2 was running in 2017, and there was a huge hack because of a bug in the system that nobody kind of checked before or thought of before. Then we are talking about network security. Which infrastructure layer do you think it might impact in the blockchain infrastructure? Do we remember? Remember yesterday we were talking about different layers? So that's layer 2 solutions. In the blockchain infrastructure, we had, what's the hardware, then data layer, then network layer, then consensus layer, and then application layer. So the network layer is really all about what are the issues that could happen in the telecommunication network that is set up. So distributed denial of service, this is something that is also part of a regular cybersecurity issues, but certainly is equally valid or applicable to blockchain scenario. So, so in 2017, Ethereum, which is a permissioned platform, they had a DDoS attack that really slowed down the system and almost shut it down. And the way the hackers were able to get into it was there was a loophole in the incentive that was there for the miners, and somehow they were able to find that loophole and exploit it and then overwhelm the system with these fake requests. There's something called Sybil attack, where basically it kind of sounds similar to DDoS, but DDoS can be from multiple entities. Here a single attacker creates multiple fake identities, which is really a node. So instead of having one person having one vote through one node, you have one person having multiple nodes and therefore multiple votes in the consensus mechanism, which of course is not how the consensus mechanism is supposed to work. So Sybil attack is one kind, and then risk of quantum computing. It's like we have talked about before, it's fairly new and still not commercialized. It's still years away from commercial use, but every year it's exponentially growing in terms of how much closer we are getting to the commercialization of quantum computing. What do we use in the computers? What's the unit? A bit, right? You have 0 or 1, and that's a bit, and then you have byte and all kinds of things. In quantum computing, the word that is used is called a qubit, and it could be anything between 0 and 1. So again goes back to our quantum mechanics, where it's a probability at any given point in time. This qubit could be this or that, or probability distribution. So that's why, most of us have very hard time comprehending, how can it be? It has to be one thing, but the rules of physics are very different at the quantum level. So hard for us to really wrap our heads around. But the thing for us to know is that quantum computing, even now in the research R&D stage, it outperforms on every level. So the reason a lot of the researchers are spending their time working on quantum computing and making it a reality and commercialized is that the hope is that there are so many problems that we cannot solve because of the lack of computational power. like problems related to the universe, the fundamental nature of the universe, the problems related to disease and propagation and so on, because the amount of computations that the system has to go through to arrive at any valid insights is humongous. That is out of the scope for most of our existing computational power. So the hope is that with the computational power that the quantum computing promises, a lot of the problems that we are dealing with, we could find solutions faster and therefore be able to do something about environmental disaster. How, that butterfly effect we have heard about. Butterfly flaps its wing in one corner of the globe and its effect is propagated throughout the globe. So how does that happen? That's a very, very difficult problem, gets into thermodynamics and weather and all kinds of things. So that's why quantum computing is so highly anticipated. But it also is gonna annihilate all our existing security measures, because if there is a hacker who has access to quantum computing, it may take them only mere seconds or minutes to break the code to enter into a system. So the blockchain, which is basically the whole premise, is that it's very, very difficult computationally to break the chain or enter into the chain unsolicited. But with quantum computing, that will go out of the window. So therefore, the developers now, they have to think ahead that, okay, 5 years from now or 10 years from now, whatever the horizon may be, it will happen. The quantum computing will be there. So then what? Do we then just throw everything into the trash, or can we think of the measures now to protect against the quantum computing coming on the horizon and anybody hacker trying to take advantage of that computational power to break into the blockchain? So you can build safeguards right now, and that's what is happening in terms of the research also. And then I think we know phishing attacks, and this is the remember, most of us, most of the attacks happen not because the hacker is very smart, but we are very I would say stupid, but we are very, laissez-faire, well, who's going to it? Nobody wants my stuff, I don't have anything to hide, or but then you forget that they get access to one thing and they can get access to everything about you. What happened? Your battery is running low. Acha. Thank you. So why are we not going forward? चलिए मैं इसको हाथ से कर देती हूँ. हाथ से भी नहीं हो रहा. अटक गया है क्या? This seems to be stuck. Is it running off the USB, or did we transfer the file on the? ये इससे भी हाथ से भी नहीं हो रहा है. करिए जरा. Okay, it did. आपके हाथ लगने से ठीक होता है ये.
अब चल रहा है, चलेगा. वो वाला पेज कौन सा था? 4 स्लाइड.
ठीक है. आप यही आसपास ही रहिए, फिर से अटकेगा तो.
इसको टच कर हो जाएगा.
ठीक है, हाँ, कोई बात नहीं. Thank you. See, human touch. That is what is the important thing. Sometimes it works for the positive and sometimes not. But this case works for positive. Okay, so let me make sure I was on the right slide. Yes. So we talked about, everybody remember what Sybil attack? It's just flooding the, it's kind of similar to DDoS in that sense, but in the context of blockchain instead of a regular IP request to overwhelm the server in a DDoS attack. And then something called Eclipse attack. I actually like the names of these attacks that they have come up with. Kind of nice, instead of that UTXOs and all that stuff. So Eclipse attack is You isolate a node and then prevent it from participating on the blockchain. So therefore, if a node is disabled for whatever reason, that it may impact the rest of the network also. So mitigation is that you build into your architecture some of the safeguards to prevent that. So idea here is that this is very, very simple way, but the actual mitigation is going to be much more complex. What's important for us to know is that if you as a business are thinking of blockchain adoption, you need to know, okay, what are the different ways that my system can be at risk? And therefore, ask the developer or ask the provider, if you're buying into a platform, how are you taking, what steps are you taking to mitigate those risks for me, so that when I become part of this blockchain consortium or whatever, hybrid or whatever it is, that I'm not going to be disabled or I'm not going to lose my assets in value. Private key management, we have another slide later on. Can somebody tell me what is this private key we are talking about again? Hanji? So it's part of the public-private key pair thing. And where do we use the private key again in our how blockchain works understanding?
Whenever we are creating some connection between two blocks, that time what we need to do, we need to create that hash using this private key. That time we are using to secure connection of two blocks.
So typically private key is used for digital signature, for me to authenticate that it is me who is initiating the transaction or receiving the transaction. So Alice and Bob example, Alice has to use her private key and Bob has to use his private key to be the authentic sender or authentic receiver, right? Everybody understand? So what is the special property about private key? Right, and it has to be kept secret, right? Public keys are broadcast. Everybody should know what the public key is, so they can, initiate the transaction and send me the money or whatever, or I can send somebody the money. But private key should remain private. Now, what does that mean? How do I keep it private? So there are different mechanisms. It's not like I'll just put it in some hidden folder on my laptop and be done with it. That's one of the areas where primarily a lot of risks reside, because as human being, some people are very security conscious, some people are very aware of the risks that can be, but most other people, you can't assume the people who are going to be using the blockchain know about the risk, and they shouldn't, right? If the system is set up correctly and efficiently, then I as a user should not have to know anything about how am I keeping my private key secure, or who's going to do the Sybil attack, or what is 51%. I should just be able to do whatever I need to do and get on with the rest of my life. So, but this is one area where the human error element is the highest, and that's also where the security risk becomes paramount, because somebody can be storing their keys in a very unsecure way, just on the laptop or something. Then if even if somebody is not able to break into the blockchain, they can break into your laptop or your node or your device and steal it. Phishing attacks, even if you have it in a wallet, and usually that's what happens, you have these digital wallets in which these things are stored, and they are mostly secure, but there are ways to get around it. And of course, this is the most important thing, like how Aadhaar card you download, but that's just for download. So the password is very, very simple, that the first 4 letters of your first name and 4 digits of your year of birth, right, that anybody can know. But the purpose there is you are just downloading, so maybe it's not as critical. But imagine if that was the way you were accessing your Aadhaar card online. So then that's very weak password, So that would leave you susceptible for anybody coming and stealing it. And once they have your Aadhaar card and all kinds of details, then we are in trouble. So the mitigation is, we'll talk a little bit more about it. But the idea is there are some technical solutions like hardware wallet, multi-signature wallet, and of course education, making people aware, bombarding them with messages that, you know, don't use this weak password, or kind of the messaging we get on TV and radio these days pretty often, which I think is a good thing. So then we get into the business and operational side of the security. So one is the technical aspect of the security. The other is on the business side. How is the business going to manage all these security risks? Do they have a plan? So have you heard of threat modeling? Threat modeling is basically a model that companies or entities develop to assess what are the different threats they are facing or may face, and how are they going to respond to it. And it's not just for blockchain, even for, like, if you're a company, what happens in the case of flood, or what happens in the case of fire, what happens in the case of earthquake, or what happens if you have suddenly mass layoff for some reason, or people just leave, or, you know, all kinds of threats, whatever the threat is most relevant to a business operation. Some businesses it doesn't matter, so their threats are very low, so they don't have to necessarily do anything much. But most businesses, especially when you're in the software business, and if you are the kind of company that's implementing blockchain, that means you are in some sort of a critical or sophisticated or something that needs to be secured, right? So that means it's high assets, high value in some sense that you're trying to secure. So therefore your threat levels are likely to be high. So in adding on to the regular threat modeling that a company should be doing and probably are doing, they need to also add threat to the blockchain implementation. How many of you here are from the management or HR type of thing? That we had. So do you guys talk about threat modeling? Because that's usually a management thing. What? That's no. That has nothing to do with threat modeling. And SWOT is overrated. That's just I'm sorry, I don't mean to bring down the SWOT analysis. Somebody came up with it, and it's very good for a quick thing. But if you're going to rely on SWOT analysis to do some deep, insightful, strategic thinking, that's not a good idea. So threat modeling usually would be somewhere in embedded, or SWOT analysis should be asking that question, do you have a threat model in place or not? So somebody else was saying something. Risk analysis, okay, so it might be called different names, but risk and threat sometimes is the magnitude. You know, risk is something, threat is like something that is existential in nature, that if the company faces this, then they may shut down. There may be loss of assets, loss of life even, depending on what kind of company we're talking about. So that's for those of you who are in human resources and management, that may be something for you to think about, and then consider whatever technology, whether it's blockchain or some other information system, because any company these days does have some sort of information system in place. Is there any risk or threats to that technology that should be considered or have been considered in that threat modeling? So all this is systematic identification of potential threats of blockchain. You know, sounds pretty obvious thing, but obvious is not always commonplace, we know, right? So that's all that we need to be mindful. There's something called decentralized identity management, meaning that the user is in charge of managing and creating and managing their own identity, reducing the reliance on third parties. It can put us at odds with the government thing, because think of Aadhaar card again. I can't create my own Aadhaar card without going through the government process and so on. If I create my own identity, how does the government recognize it or not? So there are all kinds of those questions that need to be considered. But in certain scenarios, it's becoming a thing. It's kind of similar to the self-attested things we do these days, right? In the past, it used to be you have to get a stamp paper and certify and have 10 signatures about something. Now they're saying, okay, just self-attest, and then, because the idea there is that 99.99% of the people are honest. They're not doing any criminal things. So the idea is to reduce the paperwork for those people, and then the very tiny percentage that is up to really something nefarious, then you figure out processes to catch them and take care of that. So private key management that we were talking a little bit about earlier. So the companies provide some hardware-based solutions. So one of them is called hardware security module. So again, my expectation is not that we need to understand exactly how and what happens, but to understand that there are not just what I call behavioral solutions, that I need to be mindful of my password and need to keep it secure, but there are hardware and software solutions also. So the best way to do any security is a combination of all three. That you have hardware security, software security, and then you educate people behaviorally. So in tandem, those three things is something that will ensure that your system is secure. But if you just leave it to one or the other, then there are always weaknesses to exploit, kind of like that trilemma thing we were talking about. Once again, what's a trilemma? What was it about? I just heard a buzz. Somebody needs to just say it out that I can understand. Koi bataiye? Sir? Very good. So the three decentralization, scalability, and security. So trilemma says that at this time all three of them are not, it's not possible to achieve all three at the same level. So if you are going for one, the other might suffer. So kind of the same thing here, that hardware solutions, software solution, and behavioral solutions in security need to go in tandem to make things secure. Multi-signature wallets, instead of like, you have Samsung wallet or this wallet, or every company these days, banks offer wallets. But the idea is to make it more secure by having multiple parties. Who those multiple parties might be depends on the scenario. It could be that the bank also has to approve if you want to spend something on your wallet. Two-step verification is kind of that instead of me just spending money from my wallet, the bank is saying, okay, let me know, is it really you, by using that two-step verification. Incident response, how are you going to and how fast can you respond to any incident that does occur? So that's all part of, what's the term? All this is part of what? Threat modeling. Okay. So a little bit more. I don't think any of this is something that is completely new. You guys in your disciplines, you probably have studied something, and a lot of it is common sense. So the idea of how do you go about threat modeling in blockchain system is you look at different components, identify what the targets might be, understand the potential threats, develop mitigation strategies, and that's it, right? I mean, it's very simple steps, but the idea is to do it and do it regularly, update these regularly, which is something that does not necessarily happen in organizations. One would think it would, right? But why do you think that happens? Is it because they don't care, or what happens? It's just like us human beings, we always have these priorities, right? We are always putting out fires, or I have to do this today, and I have to reply to this email, I have to send this to this. So they're always to do things in front of you, same as organizations. They're always having these priorities that they have to deal with, so that other things fall below in the radar, that, you know, yeah, we'll get to, right now nobody is going to attack us, you know, today or tomorrow, so we'll deal with it. And that's how things happen. Because organizations also have limited resources and limited people, right? Unless they are big enough where they can have a whole department dedicated to just threat modeling, it's usually going to be the people working, senior managers or vice managers, who are going to be involved in it. So that's usually the reason. So how do you deal with it? Again, from the management perspective, somebody has to champion these things. In other words, keeps you know, saying that no, this is really key, because if something does happen, then none of these existing priorities that we have are going to be happening, or, you know, will be stuck. So that's where all this management and strategic issues come into the place. So you can imagine that if you are a financial service, supply chain, healthcare, pharmaceutical, any of the companies really, how much they will be impacted by any of these attacks materializing. So therefore it becomes critical to do the threat modeling and have a plan in place. Okay, private key management, I thought we went through it already, didn't we? Did I do this again? Maybe. So very quickly, private keys are cryptographic, right? And it is to authorize the transaction. So without the public-private keys, we really can't do much. And the solutions, we already talked about HSM, which stands for Hardware Security Modules. So these are specialized hardware devices that generate and store private keys securely. And they prevent, basically it's isolated, so they are not connected to any of the external systems, or making it much more difficult for the attackers. So then, I think we already talked about this. I might have gotten this twice. Let's move on. So we have a threat model that has to have how are you going to respond to an actual threat, and that's what the incident response is all about. And this is, of course, key here. Unlike traditional systems, blockchain's immutability means that errors or breaches cannot be undone. So, which requires really thoughtful system in place to make sure the security risks are minimized or zero as much as possible. So monitoring system, so that becomes what? A cost, right? It's not just enough to buy the system or rent the system or subscribe to the blockchain response. You also have to have somebody or paying somebody to be monitoring the system against all these threats. Backups. This is something I tell my students, you know, if there is one mantra that you need to believe in, backup. Has any of you ever lost your data while you were working on some big report or something like that? Or your computer crashed and wiped out everything and you couldn't recover? I see some nods. If not, that's good. That means, I hope it's not because the computer never crashed, but it's because you always have backups. Because if you are those people who don't make backups, you are just playing Russian roulette. So make sure you make backups of all your data and make backup of the backups. And it could be as simple as it's just copying to external hard drive or your Google Drive or both. Oh, I remembered the name yesterday. I was having trouble with Dropbox, the storage facility. Remember we were talking about Okay. So 625 million in 2 years ago. And a better incident response could have minimized the damage by freezing suspicious transactions early on. So it works. Or rather, the lack of this really can be devastating for a company. So, and I think there are specialized companies now. So one of the things that happens anytime new technologies come into the place, new business models come about. So even though a blockchain company might be focusing more on technological solutions, there might be other consulting companies or other companies that can help with non-technical things, like we can help you develop a threat management plan and how to respond and what to do and so on and so forth. So even though you're not a blockchain expert, if you understand enough about it, you can begin to think about what kind of other services or businesses or entrepreneurial things you can do creatively to help support the companies who are adopting it. So it's not just that you have to be a computer scientist to do well in this space. You just have to be creative in terms of thinking, what do organizations need? What are the things they lack? And where can I provide value-added service? So this is just basically, NIST is one of the organizations in the United States. They focus on cybersecurity. So they have a lot of researchers who work for them, and they also have a lot of other researchers working in academia whose input and insights and research is taken into account when developing these frameworks. So they're considered what you call as non-denominational, meaning that they are not aligned with any particular government or that kind of thing. They're just there to provide this service, that how to be protecting against cybersecurity, and these are the new standards and so on. So any questions so far? Okay. So we talked about what are the different strategies the companies should have in place. So a lot of this is really getting into management and strategy. So things like we talked about threat modeling, audits. Just a few days ago, there was somebody here for biotechnology department audit or evaluation that, so in education that happens a lot. Somebody external would come to evaluate, is the department really teaching the courses they should be teaching, or how are they evaluating the students, or is everybody getting A's and walking away with a degree, and so the quality, the benchmarks, are they being met or not? So that is what an audit is, and that's also relevant here. And then there are tools that can support it. Network hardening, meaning implementing advanced encryption protocol on top of the already existing encryption. Private key management, and of course incident response plan. Anything here that sounds like something that is not common sense? No, it's all common sense, right? Okay, that time of the day. Ready? Okay. So, what is a Sybil attack? So, an attack where multiple fake identities or the nodes are created to gain influence over the network, because it's a democratic thing in blockchain. Majority wins. So if you happen to be the majority, then you set the rules. So Sybil attack. I wonder who Sybil was. Something to think about. I get these random train of thoughts in between. So I just like the name Sybil. And what was the other one? Eclipse. Yeah. So what is the primary challenge in incident response for blockchain ecosystem? So while all of these may be valid, the biggest thing really is that because it's immutable, if any threat does happen, then it's very hard to recover. You can't just, undo something. So that is where the security in blockchain becomes even more critical. Now we get into the layer 2 that we were talking about. So while we are on the subject, what was layer 2 again? And how do we do that in layer 2? Layer 1 is what? We are doing a little review of yesterday. What was layer 1? The actual base blockchain, and on top of that you have layer 2. And what does layer 2 do? You open channels. So it's kind of like offline, online type of thing. You're just offlining certain transactions. Do you remember that? Yes. And then those transactions at the end of the day kind of then brought back into the blockchain. So the idea is to speed it up and therefore speed the transaction speed and of course make it more scalable. So that is what the Lightning 2 was. So what is the answer here? To enhance blockchain scalability by reducing congestion on the main chain. What was the other name for the main chain?
Beacon chain.
Beacon chain. Very good. Okay, and then we have one more. What is the primary focus of threat modeling? I think if we didn't know any answer and if we just said B, 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 we would still get the right answer. I'm just noticing that. I'm sure that somebody must have done some research in mathematics, like why do we all tend to have the right answer usually in B? Very rare, I don't know what it is. It seems to be the thing. Okay, so are we feeling comfortable about what we just did? What did we just do? So we talked about two kinds of things, technical security and business and operational security, right? And what is the primary thing in the business and operational security that we were talking about? Threat modeling, right? Okay. So what time is it? Okay, we have some time. So I think we should be able to, so this is, this section is not going to be something that is a huge surprise here. It's just these things are relevant in other IS context also. So the idea is that in blockchain, regulations, ethics and governance play a major role. Can somebody give me an example of why or how, based on what we have been talking about last 4 days? Yes.
We implement smart contracts, and they should not fail, or they are not immutable. That is why we need to take care of regulatory, ethics, and governance norms.
Very good. Smart contracts, you have to make sure that it would be legal in wherever it is initiated or executed, especially if the nature of the smart contracts spans global or more than a municipality or state or a country. Very good. And governance also comes into the play because government is the one that sets policy. So the smart contract has to know what are the policies existing or might be changing, and if they change, how do you consider that back into the account, right? So smart contract is made based on the policies today. Governments come and go and they change policy. So what happens if the policy changes down the road? So how do you account for it? Do you create a new smart contract? Can you update the old contract, etc.? What about the ethics? Where do the ethics enter into the picture in blockchain? Yes.
We don't misuse the blockchain technology in defense or in anything because it cannot be tracked.
So how do you prevent that? You mean that node participants as a bad actor, or just an entity using blockchain, like those Bond villains? No, I just want to make sure.
Both, and right now there are no regulations, so
Yeah.
we can't do much for the security.
Okay, so part of the ethics I'm hearing is that don't use blockchain for doing bad things more securely, right? Kind of thing. And I'm sure the drug cartels and so on probably are going to be prime clients of these kind of technologies, because imagine if you're a drug cartel or terrorist organization, all your financial transactions and all the whereabouts of what you're doing is now so secure that none of the governments or police agencies in the world can break into it. So you, and then you were saying something?
As an ethical point of view, the person with the administrative access or the person who is having the main access needs to be ethical, else they can disrupt the blockchain.
That's a good point, but that's more applicable on hybrid perhaps, because the whole point of blockchain was to remove that trust mechanism. Remember on the first day we were talking about that most of the existing systems are based on third party trust, right? We trust the banks, we trust this entity that is let's say in the stock exchange, we go through somebody who's going to then help us invest in the stock market and so on. So the idea is to not have that, so I can deal directly or do the transactions directly. However, we also saw that because of the scalability and speed issues, the hybrid type of solutions, even Lightning 2, right? In Lightning 2, you're basically going off blockchain to do certain things. So there certainly that you're going back to the whole old trust mechanism there. You're hoping and trusting that these people will not do. What else? You were saying something.
Validation of the transaction by the miners, which ensures authenticity of the transactions and ensures fairness.
Is that ethical or not ethical? Ethical. So what about proof of stake? What was one of the challenges or potential risk?
People with the higher stakes are going to impact the blockchain as
Right.
per their requirements.
So then that goes back to the old model that rich people have more power and people with less money have less power. So that's really not ethical. So that's another thing. And the other thing, if we talked about that, perhaps you may recall, is blockchains are expensive. They are very complex systems. So then we may get into, and we are already getting into, that the bigger organizations with a lot of assets and money can afford it, but not the other institutions, other entities. So that may impact the market competitiveness. So those of you who are in the marketing or entrepreneurial type of fields, that is something to consider. How do new technologies impact the level of competitiveness in the marketplace for organizations or entities to exist? So those are all the some of the ethical issue, and of course the biggest ethical issue is this whole environmental impact. Blockchains make it even worse. It's not that they are the only ones, because as I talked about, you have these huge data centers and server farms and whatnot that are really eating up a lot of our environmental resources at a very fast, accelerated rate. Why? Because we like our likes and we like to comment. But blockchain is even more intensive in its use. So those are some of the ethical issues. In terms of the governance, so here there is an example. In the United States, it's Securities Exchange Commission. So they are kind of like the ones who oversee the financial stock markets, that everything is following the rules and so on and so forth. Nobody is doing insider trading. So SEC still kind of governments are iffy about should we use cryptocurrencies. At one time we thought, okay, governments are going to adopt it, then they backtracked. So it's still, I think as cryptocurrencies go up and down, the mood of the government also changes. In European Union, I'm having trouble recalling GDPR. What's the full? Say that again? General Data Protection Rights. Thank you so much. So they have very strict rules for privacy, data privacy and so on, which is good. I wish US was more like that. So if you're doing business in Europe and US, then how do you, smart contracts for example, what kind of things do you keep in mind? And in India, the regulations are not there, the policy is not there. Mr. Vinay was, that was one thing he was talking about, that it's very difficult for blockchain developers and clients to know if the transaction that they are executing on blockchain, is it legal or is it not legal, because nobody knows what the policy is. So that affects the market. We talked about this already, energy efficiency. There are some, don't ask me what those are, I haven't had time to look into it, I just found this, but my point is simply that there are challenges, but then there are people looking for new solutions. Transparency versus privacy, we have talked about this, we have talked about fraud and misuse, like you guys were talking about. Blockchain governance, so on-chain, off-chain, and something called role of decentralized autonomous organizations. So the idea here is that these organizations, kind of like consortiums, are just not answering to any government and so on. Okay. Oh, well, I probably forgot to do the animation thing here. So let's answer these first. What is the potential risk to blockchain system posed by quantum computing? Breaking cryptographic security mechanisms, because right now the whole premise of e-commerce and blockchain, which uses public-private keys, which use something called one-way function, meaning you take this input, you get an output, but if you know the output, you cannot reverse engineer to figure out what the input was. But once the quantum computing comes into place, that may no longer be true. But most likely we will start using quantum computing, and then that would do its own security. So we'll again be in that race till 100 years from now. Who knows what other kind of computing might be invented. So it's always a race between locking something and breaking and entering. So what about this one? Anybody remember? What is the significance of zero knowledge proofs in blockchain?
They enable private transaction by providing.
So the idea is that you validate the data without having to see the data. So kind of like almost a self-attest thing in a way. Then we get that animation. Oh, okay. Which of the following governance model is typically faster but less faster and less decentralized? Remember your lightning solution, layer 2, off-chain, remember? So that was the whole reason why we were going off-chain, to get faster. But because we were off-chain, we were relying on the old trust mechanisms, which is less decentralized. Okay, then let's do one more. Which of the following is a common example of on-chain governance? We had this on a slide that some of you may not have had time to look, but the idea, this time it's D, it's not B anymore. So, decentralized autonomous organization. So, we have actually a perfect timing. Today we might actually be able to go through all the slides. So, that's a first in the 5 days. So, the next is just very quick look at how the blockchain has evolved over the years. So, there is blockchain 1.0, 2.0, and this is the more 3.0 futuristic view. So, in the blockchain 1.0, so this goes all the way back to Bitcoin and Satoshi Nakamoto, and mostly it was cryptocurrency. And perhaps that is the reason why everybody, most people, when you tell them about blockchain, they think cryptocurrency, which also has negative connotations for a lot of them, because cryptocurrencies keep losing. That's what we read in the media all the time, right? People lost so much money in cryptocurrency. So part of the challenge for most of the software developers in blockchain and consulting services in blockchain is, how do you get people to move away from this negative mindset and association with cryptocurrency to making them understand that blockchains are so much more than that. So this is where the blockchain 2.0, when it evolved in late 2015s or 2016, 17 onwards, when we started blockchain implementation of smart contracts. So basically more than simply cryptocurrency transactions, we started getting DApps or decentralized applications. Where do you think these will reside in the infrastructure? Application layer. And smart contracts are autonomously executing algorithms or software or programs or whatever you want to call it. And they still are using proof of work protocol for consensus, proof of work protocol for consensus. And then we get into 3.0. By the way, this is a minor. So then we started getting into more of mother applications like NFTs and all kinds of variations and types of blockchains. And a lot of the things that we have been talking about today and last 2 days, yesterday and today, they all are part of the blockchain 3.0, making it more secure, having hybrid models to take care of the trilemma problem. Oh, I think it's a certificate time, huh? So, okay. Any questions on this? Okay. So again, this is a quick slide which looks at just the market share of different things, and this will probably change tomorrow, and next day and so on. So take this with a grain of salt, but at least it gives us an idea that among the cryptocurrencies, Bitcoin still is the king or queen, and then you have all these other ones. Smart contracts is happening already. Can anybody think of a couple of companies that we have talked about which are international in nature and use smart contract? Walmart, definitely. IBM and PwC. And remember the Maersk, TradeLens. What industry are they in? Shipping industry. So we were talking about that a little bit. Health, yes, very good. Decentralized finance or DeFi or DeFi or however you pronounce it. They are also a huge users of the smart contracts. And in 2020, which is almost 5 years old, so there was this many projects. So I'm sure by now there are tons and tons more. And then of course They can be used to improve transparency, traceability, and reliability in value chains by reducing information asymmetry. Can anybody tell me what information asymmetry means?
Data redundancy.
Perhaps not quite. Not quite. Have you heard of insider trading? Yes. What's insider trading about? If I'm the insider trader, it's because I have a little bit more information about what's going to happen to the stock market than the rest of the world. So that's information asymmetry. Some participants having more information about the state of things than the other participants makes it information asymmetry, and information asymmetry is always profitable for those who have the information and not good for those who do not have the information. So the idea behind e-commerce when it originated was that it will reduce the information asymmetry, which it has. You know, now you and I know the price of apples on different platforms, right? We can just go online and say, okay, what is the price of apple today, or in different stores, instead of having to go to each store to get that data. And that's just a very small example, but even in the stock markets, and so there is a reduction of information asymmetry, but it's not completely gone. So the idea again behind blockchain, at least the public one, was to reduce it to zero. But if we reduce it to zero, then we have other challenges, which were, if we have no information asymmetry, what are the other challenges we have in blockchain? That's what we have been talking about for the last 2 days. Scalability, transaction speeds, and it's just slow. The system is slow because we are making it very democratic, which means that everybody has equal say. It takes time. So it's democratic, everybody has the same voice, but it slows the system down. So the idea looking forward in terms of where blockchain research and companies are headed is, how do you reduce this information asymmetry? Okay. Can somebody give me an example of a case study we briefly looked at in class about tracing, and it had ethical dimensions to it, and something that most of us like to have? Yes, but these are very expensive things usually. You remember blood diamonds?
Yes, ma'am.
Yeah. So that is one place where blockchain is being used to trace from the origin and where it is actually being bought by a customer. So the customer can know, did it come from places where it is slave labor, or is it ethically sourced? And that goes for mangoes also, and coffee beans also, and a lot of other products. Are they ethically sourced or not? Cobalt in batteries, right? Without cobalt, the modern device system would tank. So cobalt is not something that you find in every mine, right? So how it is mined, usually it is found in places that are remote or poor. So again, the same problem, ethical sourcing. Okay, so I think in terms of the future trends and developments, number one is, of course, how do we make blockchain scalable? Can somebody tell me quickly what was sharding again?
Dividing blockchain into sub-blocks.
So instead of having one big blockchain doing all the transactions, you break it into shards. A shard is a smaller blockchain which can operate as its own blockchain, and it's doing its own set of transactions. So hopefully it is faster than doing everything at once on that one big main beacon blockchain. Very good. Interoperability, basically blockchain has to sit in with all the other systems in place, so it has to be able to exchange data. Do you remember the name for the system that can get data from external sources? Oracle, you remember? Oracle. So that's part of the interoperability because something is connected to the external system. So that's the big thing these days. Privacy enhancements, that how do you get privacy, complete privacy? When blockchain you still have to share, so can you reduce that sharing of the data even more? And then of course this is another thing on the horizon, quantum resistant algorithms, that when the quantum computing does happen, how do you make sure that we are not going to lose everything completely? And tokenization. So more, remember we were talking about that NFTs could be used for you and I to own a small piece of something more expensive, because then it becomes very, very affordable and we can buy it and hopefully its value appreciates, but that's the risk, just like in stock market that you take. DeFi. And one of the things actually I should have written down here is the governance or policies and regulations. So that's another thing. The governments have not caught up with blockchain and all its implications. So that's a one big gap that's there. But it's not really about blockchain. So that's why, but it's blockchain or any of the system, IS system doesn't operate in isolation. It's always part of the existing societal economic ecosystem. So the more it can be able to connect with that ecosystem seamlessly, more successful it is likely to be. I think we kind of have a good idea about this. So I'm gonna just, oh, this is another big thing. How do you integrate AI? Which layer do you think AI might be going into, or IoT, in our infrastructure? Application. And most likely you can make it very useful for user interface. So the user, if it doesn't understand AI, can help educate the user seamlessly and help them get more use out of blockchain and get that fear out of their system that, oh, something is going to happen, I'm going to lose everything. And then of course, this is another thing that's a lot of research is going on. How do you make them energy efficient? And that's it. Before you sit down for your exam, you have been a wonderful audience. I really appreciate you coming and staying for the whole duration and listening, and more importantly participating. I think every question I've asked, there were pretty much every hand was going up, so that is good because that tells me that you are listening and hopefully getting something out of it. And I hope that you keep in mind that you don't have to memorize anything. My philosophy in teaching has always been that why should I have to memorize anything when I can just go and look it up? So that is not the idea. The idea is to get an understanding of the, I use the word ecosystem a lot, but it applies, that you understand what it is and how does it fit in, what are the issues and challenges and the problems, and more of a strategic thinking and creative thinking. So I hope that from this course you got something of an understanding of blockchain. I hope it shattered some of the myths you might have been carrying on unconsciously, and perhaps it helped you clarify what it is all about and how it can be useful and will be useful to us in future. And more importantly, I hope you can begin to think about what it is you can do and how can it apply in your discipline, perhaps as a project or as a research project, or working in a company after graduating and doing something like with blockchain kind of technologies, and helping reduce or mitigate all the risks that are associated with this. So thank you so much. Thank you. So I think